Do you ever wake up thinking about a trade you didn't take, or lie awake at night fretting about one you did? What if I told you that this mental tug of war is why most traders lose? Not bad indicators, not lack of strategy, but mindset. In the next 12 minutes, I'll pull back the curtain on what separates profitable traders from the rest. We'll go through scalping on short time frames, emotions you must master, real trade examples, rules of thumb you can apply across crypto, stocks, Forex, timeless mindset insights nobody talks about. By the end, you'll see trading less as charts and signals, and more as winning the battle inside your head. If you've ever lost money because of greed, fear, or a breakout that turned into a trap, stick around. Also, tell me in the comments, what's been your worst trade mentally? I'll respond to some. Let's start with the biggest myth. Trading is about charts and signals. All the indicators in the world won't help if you can't control your psychology. Think about it. You might know that the 15-minute chart is showing a resistance, RSI is overbought, volume looks weak, but you still jump in, hoping. That's mindset failure. Trading isn't 30 to 70 charts versus strategy. I believe mindset is at least 70% of what makes you profitable in the long run. Without discipline, you'll cut winners too early, let losers run, overtrade, chase. Across all markets, Forex, crypto, stocks, these mental challenges recur. The tools change, the volatility changes, but emotional mistakes, fear, greed, impulsivity, hope, these never change. Let's break this down with real trade style examples, especially scalping under 1 hour, say 5 to 15-minute charts. Example: A. Scalping on a 15-minute chart. When to cut losses quickly. Imagine you enter longs because price seems to break above a recent high. You see bullish candle, good momentum. But within 2 candles, it retraces sharply, volume drops, wick shows rejection. What do? A trader with good mindset cuts the trade. Maybe you lose 0.5 to 1% instead of letting loss become 3 to 4%. Rule applied. Define loss threshold before entry. If trade moves against you more than that threshold, for scalping maybe 0.5 to 1%, exit without second guessing. Example B. Handling greed. Knowing when to take profit. Suppose you scalp and the price moves in your favor quickly. You see plus 1%, plus 1.5%. Do you wait for plus 3% or exit? Greed tempts you to hold, but often markets retrace, especially on short time scales. A disciplined trader has profit targets and takes partial or full profit when target met. Real example. Let's say you buy BTC/USD, get plus 1.2% profit, see resistance level, wick forming, weakening momentum, you take profit. If you wait, it often reverses. Example: C. Anticipating false breakouts, using discipline instead of emotion. False breakouts are where price breaks a support or resistance, you think it'll continue, but then price flips back. These are traps. According to price action education, false breakouts are common at key levels and tend to catch traders who enter on emotion instead of waiting confirmation. How to spot them: low volume during breakout, wick closing back into level, retest failing, mismatch between higher time frame trend and breakout direction. For example, you see resistance at $50. Breaks above $50 on 5-minute chart, candle closes just above, but volume is low. Next candle shows rejection. It closes back below $50. That's a false breakout. Discipline says either wait for retest, wait for confirmation, or avoid that trade. Here are timeless rules of thumb, short statements that you can remember in the heat of trading. These are your mental anchors. If you can't sleep because of a trade, you're risking too much. A small win with discipline beats a big win with luck. Define your stop loss and take profit before entering. No trade is justified after the fact by hope. When you feel FOMO, fear of missing out, back off. The best trades are often the ones you wait for, not the ones you chase. If one trade hurts emotionally more than it should, you are trading size or leverage that's too high. Journaling is non-negotiable. Record how you felt, what your expectations were, why you exited. Over time, you see patterns in your behavior. Scalping under 1 hour requires even sharper discipline. Because everything is faster, the wins, the losses, the reversals. Let's talk specifics. Time dilation. In 5-minute chart, that flicker of wick is huge. You will be wrong often. What separates good scalpers is not being wrong less, but managing being wrong well. Position size. Always small relative to account. Scalping amplifies both profits and losses. Mindset. Accept many small losses. Expecting every trade to win is the fastest way to blow your account. Trade frequency versus quality. More trades doesn't mean better. Waiting for setups aligned with trend, with confirmation, even if fewer, will outperform many just trade all-day scalpers. Emotional reset between trades. After a loss, you might want to revenge trade. That's almost always a disaster. Mindset discipline means stepping away, taking breather, mentally resetting. Whether you trade Forex pairs, crypto, or stocks, these mindset rules apply. Market volatility differs, but fear and greed manifest similarly. Higher leverage, common in Forex, crypto, magnifies emotional stress. Same mindset guardrails are even more critical. In crypto especially, 24/7 market means no off switch. Risk of burnout, same mindset. Set trading hours, rest, well-being. Stocks often have news-driven movements, mindset of humility. Events outside technicals can blow things up, so even technical trades must account for fundamental risk. Here are 2 real trades I did, with mindset lessons. Trade 1, a scalp turned loss turned good lesson. I entered a 15-minute chart scalp. Crypto chart breaking above resistance. Indicators looked good, volume surge. But I risked more than usual because I saw big potential. Price moved plus 0.8%, then reversed fast. Instead of cutting at predefined 1%, I held hoping for 2 to 3%. I got stopped out for minus 2.5%. What I learned, stay humble, stick to stop. Loss that kills profit is one that's allowed to run. Mental anguish afterwards. I fed into regret, which almost made me chase a bad setup later that day. Trade 2, taking profit with discipline. Another time on Forex pair. I made a scalp that hit target quickly. Price got close to next resistance. Volume tapered. Momentum seemed to stall. I could have tried to push for more. I exited, logged plus 1.5%. Another trader might say, you could have gotten plus 2 to 3%. But I walked away satisfied. Outcome. Had strength left for next trade, avoided reversal. My win-loss ratio improved, my psychological stress lower. Here's how you train yourself daily, so mindset becomes your competitive edge. Pre-trade checklist. What is the risk on this trade? What is my profit target? How big can loss be if wrong? Can I walk away if trade goes bad? Journal every trade. Not just results, but feelings. What were you thinking? Did you feel greedy? Did you enter too early? Meditation or mental training? Even 5 minutes a day of mindfulness helps you notice fear and greed in the moment. Regular review of losing trades. Not to blame, but to find patterns. Are you always letting losses run too far, or cutting winners too early? Set rules and honor them. E.g., never risk over 1% of account per trade, or whatever your rule is. Never chase after 2 losses, always wait for confirmation on breakout. Overconfidence after a big win, you start to loosen rules. Solution, after a win, reset, same discipline. Revenge trading after a loss. Solution, pause, walk away, maybe even trade a demo until mindset steady. Letting fear dominate, not entering a trade even when setup is strong. Solution, small size or split entry. Trade with rules, not fear. Impatience, jumping in before confirmation, entering too early. Solution, define confirmation. e.g. retest, volume spike, candle close, and wait for that even if you miss some trades. Let's recap the strongest rules of thumb. These are your mental anchors in the heat. If you can't sleep because of a trade, you're risking too much. A small win with discipline beats a big win with luck. Stop loss and take profit defined before entry. Greed is always louder than logic. Listen to logic. Fear of missing out is not a signal, it's a trap. Journal your trades and emotions. Trade setups aligned with trend plus confirmation over impulsive entries. So there you have it. Mindset isn't optional. It is the backbone of profitable trading. Charts will help you see what's happening, indicators will help you measure risk, but what happens between your ears determines whether you survive, whether you win over time. Scalping under 1 hour or longer trades, Forex, crypto, stocks, the mental rules are the same. If you're serious about becoming a trader who wins more than loses, begin training your mindset today. Use the rules, build discipline, journal, stay humble. If you like this video, give it a thumbs up, subscribe to the Money Route channel, turn on notifications so you don't miss videos diving into trading mindset, breakout strategy, risk management. Check the description below for links to more videos in this series. More insights, real trade breakdowns, mindset training. Click the links, watch them, and let's build your trading mindset together. Thank you for watching. I'll see you in the next one.